Hey everyone, welcome back to Corporate Decoder, the place where we break down those Wall Street filings and uncover the real stories hidden within. Today we're diving into the Federal Home Loan Bank of New York's latest report, and let's just say things are getting interesting with a bit of a shake-up at the top. So what's the big news? Well, it looks like this bank is restructuring its board of directors, and not in a small way. Some familiar faces are saying goodbye and new elections are on the horizon. Stick around as we decode what this means for the bank and its future. Before we dive in, if you like getting straightforward insights from these hefty corporate documents, consider subscribing. And for real-time discussions and community chats, join our Discord server linked in the description below. We're looking at a Form 8K filing, which is like a special bulletin for companies to announce major events that shareholders need to know about right away. Think of it as a company's official way of saying something important just happened. The key date here is August 21st, 2025, marking the earliest event this report is covering. This report is from the Federal Home Loan Bank of New York, often just called the bank. It's important to note they are a federally chartered corporation, which means they operate under federal law and oversight. The main event covered in this filing falls under item 5L2 of the report, which deals with changes in a company's leadership like directors and top officers. So the story really kicks off back in July when the bank announced that the director of the Federal Housing Finance Agency, or FXFA, had issued an order. This order basically dictates how many board seats the bank will have next year in 2026 and which ones need to be filled in the upcoming director elections this year, 2025. This order is officially called the FXFA order, and it's a pretty big deal because it's going to change the makeup of the board. Now here's where the direct impact hits. This FXFF order means that by the end of December this year, 2025, 4 board seats are just going to disappear. We're talking about 2 seats held by independent directors. It's important that these seats have terms that were set to expire at different times, meaning some of those directors might have been expecting to serve for a while longer. And that brings us to August 21st, the date of this report. To make sure they're following that FXFA order, the bank officially confirmed that the seats of 4 specific directors are being eliminated. These are Larry E. Thompson, who's not just an independent director, but also the board chair. Then there's David J. Naskar, who's a New York member director and serves as the board vice chair. We also have William J. Turner Jr., another New York member director, and serves as the board vice chair. We also have William J. Turner Jr., another New York member director, and Gillian A. Reed, an independent director. So that's a significant reshuffling, including top leadership positions like chair and vice chair. But it's not all about people leaving. This order also sets up new elections. Come 2025, there will be elections for 3 specific seats. 1 seat will be for a member director representing the bank's members in New Jersey. Another seat will be for a MEND US Virgin Islands. And lastly, there will be for a member director representing members in Puerto Rico and the US Virgin Islands. And lastly, there will be a district-wide election for 1 independent director. Importantly, these new directors will serve for 4-year terms, starting at the beginning of next year, 2026. This is a strategic move by the FXFA to reshape the governance and potentially the direction of the bank. This is ultimately an announcement from the Federal Home Loan Bank of New York, and the report is signed off by Kevin M. Naylan, who holds the important title of Senior Vice President and Chief Financial Officer. This shows that this leadership change is being formally acknowledged and processed by the bank's financial and senior management teams. Now, a bit of context. Federal Home Loan Banks are a group of 11 regional banks that provide funding and guidance to their member institutions like banks and credit unions across the country. They play a crucial role in the housing finance system. Changes in their board structure, especially those mandated by the FXFA, can signal shifts in regulatory focus or strategic priorities for the entire housing finance sector. While this report doesn't include detailed financial tables, the implications of these board changes are significant. A reduction in board seats and the replacement of key figures like the board chair and vice chair could lead to a change in the bank's strategic direction, risk appetite, and how it serves its members. It's like changing the captains and key officers on a ship. It definitely affects the course. Looking at this from a broader perspective, we see the FHFA actively managing the governance of these important institutions. The removal of seats and the specific focus on member and independent directors suggest a desire to either streamline the board, bring in new perspectives, or perhaps align the board's composition more closely with specific regulatory goals. The fact that these changes are happening now and impacting significant roles like the chair and vice chair indicates a potential recalibration of leadership and strategy at the Federal Home Loan Bank of New York. We'll need to watch how these new elections play out and what kind of strategic shifts, if any, are announced by the board going forward. The key takeaway here is that change is underway, driven by federal oversight, and it's impacting the highest levels of the bank's leadership. So what's my take on all this? Well, a significant shake-up like this often comes with a reason. It could be to increase efficiency, bring in directors with specific expertise needed for current market conditions, or even a response to performance issues. Though this filing doesn't give us that detail, the FA's involvement means these changes are likely strategic and aimed at strengthening the bank's operations or its role in housing finance. The risk here is any disruption that might come with new leadership and a reshaped board, but the opportunity lies in the potential for fresh ideas and improved governance that could benefit the bank and its members. It's a move towards a new chapter for the Federal Home Loan Bank of New York, and we'll be keenly watching to see how this new board steers the ship. Alright, that's our deep dive into this leadership update from the Federal Home Loan Bank of New York. What are your thoughts on these board changes? Do you think it will lead to positive outcomes for the bank? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and make sure you're subscribed so you don't miss our future analyses. And don't forget to join our Discord community for more discussions and insights. The link is in the description. Thanks for watching, and we'll see you in the next one.